In Nigeria, we see the market falling back again for the fourth consecutive trading session. The NSE ASI index down 0.3% to 35,754 points. The losers on the day included Total Nigeria, Cadbury Nigeria, Nigerian Breweries, PZ Cousins, and UAC, while some of the gainers were Nestle Nigeria, a bit of a rebound on that stock. Northern Nigerian Flour Mills, Champion Breweries, and Dangote Sugar were among the gainers on the day. For more on the Nigerians market bear run, we're now joined by Olumide Akindele, Head of Proposition and Liability at Diamond Bank, to talk us through his thoughts on developments in Nigeria's market. Thank you so much, Olumide, for joining us. It's the fourth, like I mentioned, it's the fourth day of this bear run. We've seen the market fall back in 4 consecutive sessions. I guess some people may begin to get worried, but I think the good news today is that the fall is the momentum seems to be slowing down a little bit, only about 0.3% loss on the day. So what do you make of the current market trend?
Thank you, Wale. It's nice to be back on the show. I think the fall in the market is expected. I mean, as you know, over the last couple of weeks, we've seen flight to capital by foreign investors owing to what is happening in the US in terms of their monetary policy. We expect that you would see a slowdown in equity performance going forward. Right. We also know that most of these stocks have been overvalued over a period of time. So there's a tendency, as normal, to have some steam off this valuation of all these stocks going forward. So we expect that this should happen, and we don't see any major panic. The indices tell us there's no major panic in terms of the stocks going down and things. So everything's still looking a little bit stable and upbeat. Right.
One thing that is not stable is the currency. Of course, you could say it's stabilized a little bit over the last few days, now to about 159.70 or thereabout. But then it did touch 162 last week, and we've seen the central bank intervene. And this is largely linked to foreign investor activity in our bond market. Of course, some people pulling out of the equity market as well, in line with what we're seeing across the world. So your thoughts on the outlook for the currency?
Well, I think I'm quite confident in the currency because the CBN has again come out again to say they will protect the naira. Our foreign reserves are still very strong at 48 billion. The macro indices that we currently have no indication to show that we will have a serious headache in terms of the naira going forward. I think this is just a case of a quick knee-jerk reaction in terms of what the markets do. The slowdown in foreign investors pulling out of emerging markets will probably slow down once the US have a very clear indication on the policies they're doing to actually reduce that, and we'll begin to see a slowdown in that area. Again, like I earlier said, I'm not sure, it's a panic station button that we have at the moment, and we'll see the value of the naira going up and down, for a little while to come until it steadies. And bearing in mind we're at the period where it's the summer months, the holidays. There's also the pressure for the demand of foreign currency as in Nigerians going forward. So we expect to see some form of a push in terms of the naira going forward.
All right, but in the SME space, I want to get your thoughts on what they're doing and how they're viewing this volatility of the naira. Clearly, a lot of SME companies tend to get involved in trade, imports, exports, and so they also contribute to the demand for foreign currency these days. Are you seeing any evidence that some of them are front-loading some of that demand as a result of the volatility?
Well, usually this time of the year we begin to see that uploading because obviously there's a long haul stretch to Christmas where the demand tends to peak for demands of goods and services, and everybody tries to beat the initial rush towards the end of the year. So, I mean, it is not untypical for we to have small MSMEs looking for demand for goods, more so that obviously coupled with what's going on in the rest of the world in terms of the demand and the slow general economic outlook everywhere in the world, it is only natural that most of the MSMEs beginning to actually look at the demand and look at the stock taking they need to actually apply. And again, there's also some commentators could argue that this is the last financial year before we come into election year next year. So there is also that speculation that you get the business in now while the economy begins to drive for a political year next year.
Right. Okay, let's talk a bit about results, especially from the banking space. That's going to be in the spotlight sometime next month as we begin to see those numbers for Q2 being released to the market. And I want to get your thoughts on, of course, some of the policies of the central bank may begin to be reflected in some of those numbers. The key change has been, of course, the change with respect to bank charges and the restrictions on what banks can charge on things like banking transactions. So, from your expectations for results, this results season, and how the SME space will be playing a role in what we see.
I think generally the bank results coming for Q2 and half year for some of the banks will be very impressive. I don't see the immediate impact on the CBN introduced charges just yet, because remember, these were just only introduced fully back in May, beginning of May, and most of the banks already had wind of the changes coming afoot, so they've been able to start to look for alternative revenue streams and understand the business model which they're playing, and some of them have gone ahead to go into different new revenue fee generating markets. So we don't seem, at the back of the impressive results we had in Q1 and the end of 2012, we believe, or I believe, that the set is set to continue going forward.
All right. Okay, quick thought on the central bank's SME policy. Of course, a lot is in the pipeline. The financial inclusion the financial inclusion strategy is one of the things that is firmly on the way now. So can you just give us an update on what is new in that respect?
I think what is actually probably new, it's not, which is ironically, it's not really the policy that the CBN is going. I think what is probably new in the market and new in the space is the sudden realization, especially of the financial institutions, to begin to look for ways to adopt the financial inclusion strategy, and they do it by different ways. So we're seeing gradually a proliferator of new technology, markets that most banks traditionally have not entered into. So there's an expansion in the retail space of areas of underbanked and unbanked. There is a collaboration of the telcos in terms of technology to drive the distribution of these products up and down. And again, these things are gradually building, where the landscape is changing as much as possible. There's a much awaited policy called agency banking policy that we're expecting from CBN that will kind of cap how banks have to actually bring banking to the rural areas or to the people, rather than the traditional way banks have traditionally tended to fare. So, we're gradually moving in terms of that space, and I believe the landscape will change over the next coming months. So it's a slow but steady race, and we're beginning to have early adopters.